Hello, I'm William Kumwembe with Business Time. This is a magazine program where we bring you major business and economic news stories making headlines in the country. And coming up in the program today, we speak with the outgoing World Bank country manager, Firas Raad, on his impression of the Malawi's economy in recent years. And also in the program, the government turns down 167 billion kwacha in treasury bills in March. We find out what this means. We have these and other stories. Stay tuned. Hello and welcome. This is Business Time, and in our main story in the program today, after just 2 years, the World Bank country manager Firas Raad will be leaving the post for Tanzania to become regional director, overseeing several countries including Malawi. Our reporter Kingsley Just from Lilongwe engaged Raad in an interview where they discussed the economic situation during his stay and the bank's perspective on the outlook and some economic policy issues, including the recent fuel price shock.
The World Bank has been in Malawi for decades, supporting the development agenda, but maybe others feel that there is more focus on supporting the rural poor, trying to address poverty directly, which appears not to be working where the industry is not thriving, because it is the industry that now would generate opportunities for the poor to really get income. Do you think there is need to shift the focus now to make sure that more support is getting to the industry and increase productivity, which appears to be a problem in Malawi currently?
Yeah, I would agree with you, Kingsley, that since independence, Malawi has been trapped in this low growth economic equilibrium, and the question for us has been, why so? Why hasn't the country been able to escape the poverty trap, really to climb up the income ladder over the 60 years? And there are many different hypotheses as to why. The landlocked geography, shallow financial markets, high transportation costs, so different explanations have been given, but I think in our view maybe there have been two binding constraints over the decades. One is weak economic governance in general, but also the lack of investment, private capital, as you were saying, businesses to then create the jobs for the youth of the country. And I think those two things really have to be tackled to ensure that the country then can grow at the rate that it needs to grow to become an upper middle income country as envisioned in the National Development Plan 2063, because now you're growing at a rate that is below population per capita population rate. So really the growth is not keeping up with population growth. So we do think that this weak economic governance has led to the low growth. It has also led to the cycle of reform crisis and then back to reform, and so there hasn't been a sustained effort over time to ensure that the economy stays on a positive trajectory. And this is also my message to the current government, that going forward it's very important to make sure that the reform effort now is comprehensive, and it's timely, and it's sustained over a period of time. Because there has been a bit of a tradition in the country where a reform effort starts and then the pressures build up and we see a reversal. But now I think to ensure that the country over the next 20-30 years reaches its development goals, it needs to think of a comprehensive reform effort that's sustained.
Okay. Do you see maybe some new threats ahead, maybe looking at the margins of price hikes that have been done moving forward. How do you look at the impact of this? But also, what do you expect from authorities in order to make sure that it doesn't worsen the vulnerability of the people?
I think at the moment, Kingsley, the countries of the region will be impacted by the conflict in the Middle East in particular, depending on how long it persists. And there could be energy shocks, general trade shocks, labor shocks, because a lot of people do work in the Gulf from some of the countries in the region. So I think overall there could be significant impacts. I think Malawi will not be isolated from those impacts because it does import commodities, especially fuel, from the Gulf. So now is the time, I think, to be very alert and ready for the shocks to increase, and that's why it's important to make sure the reforms are still in place, so the automatic pricing mechanism is still there. But as you rightly said, that depending on what happens to the price, the poor and the vulnerable have to be protected. The current system that the government has is very flexible, so it can be dialed up or dialed down at any time. We're on that front, I think, happy to say, and with the government, going to fund a next phase of our social protection project, which has been named as the Social Support for Resilient Livelihoods project, with a very big amount of financing in the next fiscal year. So we're hoping that will then protect some of the poor and the vulnerable during this period of transition, but also possibly external shocks emanating from the Middle East. And the problem there is we don't know how long this conflict may last. It may last 1 month, 2 months, 5 months. So I think the countries of the region have to be prepared.
All right.
Now, the government turned down 167 billion kwacha in treasury bills during the March 2026 auctions, despite investors offering a total of 567 billion kwacha across various maturities. Official results released by the Reserve Bank of Malawi show that only 400 billion kwacha was accepted, underscoring a cautious borrowing stance amid strong market demand. Chimwemwe Mangazi has the whole story.
During the period, investors applied heavily for the 364-day tenor, with bids exceeding 421 billion kwacha, but the government allotted just under 356 billion kwacha. The 182-day bills attracted over 66 billion kwacha in bids, of which about 40 billion kwacha was taken up, while the 91-day tenor saw modest interest of around 12 billion kwacha, nearly all of which was accepted. Yields remained stable throughout the month, holding at 12% for 91-day bills, 15% for 182-day bills, and 17% for 364-day bills. The consistency suggests the government is prioritizing cost management over volume, even as liquidity in the market remains strong. Presenting the budget statement recently, Finance Minister Joseph Mwanamveka told Parliament that the administration's priority is restoring macroeconomic stability through fiscal consolidation and impactful reforms.
The 2026-2027 fiscal budget is projected at 2.852 trillion, which is 9% of GDP. This is 8.8% improvement when compared to the 2025-2026 media revised fiscal deficit of 11.9%, confirming the new administration's commitment to fiscal consolidation and macroeconomic stability.
Publicity Secretary of the Financial Market Dealers Association, Ruben Nkono, notes that while cash offers may still attract traction, the long-term impact of reduced rates is unclear. Standard Bank Malawi Chief Executive Officer Philip Bandinga says the bank's portfolio has been kept strictly within 1 year maturities since 2023, a move he described as a safeguard against fiscal uncertainty.
To just give a picture, we, as Standard Bank, we had anticipated we operate in several markets. If you look at our balance sheet over a 3-year period, if you look at our exposure in terms of government securities, our exposure to government securities are less than 1 year. We don't have any instruments that are more than 1 year. We started that journey in 2023. So we're well positioned in terms of whether there's that risk now or into the future. We do believe that we've made decisions with the guidance of the board to position this business to withstand any shocks that may come with the potential restructuring.
Meanwhile, commercial banks have reduced their reference rate to 20.8% effective Tuesday, extending a downward trend that has seen rates fall by more than 4 percentage points since February.
Remember, this is Business Time, a magazine program in which we bring you major business and economic news stories making headlines in the country. And my name is William Kumwembe. We'll be right back. Welcome back. Moving on with the program. The private sector has called for stronger policy alignment if Malawi is to achieve sustainable development. Speaking ahead of the 2026 Lakeshore Business Leaders Summit, Malawi Confederation of Chambers of Commerce and Industry MCCCI Chief Executive Officer Desi Kambalame said the country holds significant opportunities in sectors such as mining. But these, according to Kambalame, require deliberate policy engagement and alignment to enhance private sector participation. Benedetta Chwandamia caught up with Kambalame in this interview.
So the theme for this year's Lakeshore Business Leaders Summit is leading with purpose, harnessing the power of accountability, transparency, and good governance. We have been reflecting on the different areas that the business community plays and also the opportunities for partnership, and saying if Malawi is going to develop, we really need to have leaders that are thinking with one purpose and really looking at making purposeful decisions. Because sometimes purposeful decisions are not always the most popular, but they're the ones that create lasting difference. So even for businesses, they can look at short-term gains and say, oh, we want to maximize our profits now, without really looking at how are they creating opportunities for future job creation, but also even looking at engaging others. So what we're looking at is how do we create partnerships, how do we create opportunities, but also how do we govern our institutions, what are the principles that are governing our decision making. So that's why we're actually looking at issues of ethics, looking at issues of transparency, looking at issues of accountability, that as we make decisions, we should really reflect and ensure that we are making decisions that actually will have lasting impact. So actually during the summit this year, we're also really going to zero in on opportunities and that can be created, and also looking at some of the policy gaps, because we know that over the last couple of years we've been talking about the ATMM strategy, but if you look at it, are the policies actually agreeing with our strategy? What is it that private sector needs to be able to unlock investment? Our recent research showed that most of the companies, about 65%, are operating at under 70% efficiency rate. That means that there is so much that we can do to actually grow our economy, but it's not happening because sometimes the policy alignment is not real. So during the summit, we actually are going to be privileged to have leaders, the leadership from 4 key ministries. So the first one is the Ministry of Industrialization, Business, Trade and Tourism. And then we'll also have engagement with the Ministry of Mining and Energy. We'll also have the Ministry of Finance, Economic Planning and Decentralization, as well as the Ministry of Agriculture, Water Development and Irrigation. I think the key issue in engaging with these ministries is not just to look at the challenges, because I think the challenges have been discussed, but it's to look at where are the opportunities, what are the policies that are going to unlock private sector investment into the growth sector of the economy, which is the ATMM areas, and especially looking at mining and manufacturing, and that's why we flagged those, to really look at how do we now create those opportunities that either from domestic investors, people are able to now look at, oh, this is where we can now put our money into, say, commercialization of the agriculture sector, processing, and also looking at export generation. But we're also trying to also look at how do we encourage even external investors to come in, because we do need foreign direct investment if this economy is going to grow.
Now, in other business news, Malawi Bureau of Standards, MBS, has introduced a new management information system that will ditch paper-based manual processes at the Bureau. MBS Director General Simon Mandala says the $2.5 million World Bank funded project will bring transparency to the Bureau. More in this report by Daniel Zimba.
Yeah, the first thing is that we had issues that our clients were raising about delays, for example, and then they wouldn't know what is going on. We have to call, sometimes we come to the Malawi Bureau of Standards. So we listened to them and we did a proper analysis and found that we needed to come up with a system that should help our stakeholders. And therefore today we are talking about the management information system. And this system will help in many aspects. One, in terms of the speed, when there is a submission, it will be processed within the shortest period possible. And also transparency. The clients should be able to log in through the client portal and then see for themselves the status, check for themselves the status of their application. So they don't need to physically come to Malawi Bureau of Standards or call us. And in terms of within the Bureau, it will improve our efficiency, the way we operate. Because those repetitive activities that have been handled by individual officers will now be handled by the system. Our focus will now be on complex matters that require a lot of thinking, but also simply checking in the system where we are stuck and what is the problem and address those. So it's a system that is going to be very helpful both to the Malawi Bureau of Standards, but also more importantly to our clients, the business community. Very, very crucial. If you delay producing a certification for a product, that's loss of money. That's not facilitating trade. In fact, you are hindering trade. So this system helps in the way that it will help to facilitate trade. When we have our test certificates, results and then certificates issued in time, it means if we are importing, we import as soon as possible. But also in terms of exports, again, all that is done time. So it's an enabler. I think it's a high time we realize that ICT is not what it used to be. It's now a business enabler. You don't integrate issues of ICT, then you are out of business. So it will facilitate trade.
Yeah, so this system is now going to be a game changer. Currently, if you need a service from Malawi Bureau of Standards, then you have to go there physically. You have to walk into the office, fill application forms, and then be assisted. So going forward, that is now going to be a thing of the past. What's going to happen is that you're going to be sitting in the comfort of your office on a computer or even a mobile phone, and then you can submit your application and you can track your application as it goes through the various stages at Malawi Bureau of Standards. So that reduces time to market, because if you need a certification, for example, for a particular product, then because of the accelerated processes, then you will be able to do that quicker. Yeah, so from a speed perspective, what we've done is to build the system based on industry standards and best practices. So it is very efficient, it is very light. You don't need a lot of bandwidth. That is also in terms of data for you to be able to access the system. So it's very light. So you'll be able to access the system, and also you are able to access it from any service, internet service provider. So it doesn't have to be your mobile phone, let's say Airtel alone, or indeed just your, let's say TNM. It can be any internet service provider. So if one service is down, you'll be able to switch to another and be able to access the system. You're not locked to one specific internet service provider. So the system can handle as much as there is. What the Southern African Trade Connectivity Project, and this is the project that is funding this project. It's a World Bank project. So what they have done is also to procure specific servers and create a data center so that they'll be able to handle this enormous traffic that we envision with the introduction of the system.
Well, with that story, we've also come to the end of today's edition of the program, Business Time, a magazine program in which we bring you major business and economic news stories making headlines in the country. On behalf of the entire production team, my name is William Kumembe. Thank you for watching, but always remember, if it doesn't make money, then it doesn't make sense. Stay safe and goodbye for now.